should be live on YouTube. Just give me 1 second. All right, let's do it. My name is Patrick Hawe. I'm an associated member of T3 Trading Group, which is a registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial conditions. Please take the time to pause the video, read this disclosure. In current position disclosure, so I had that one marijuana stock. It was a super small position, and I'm done letting it grind down, even though it was super small. So that made a new low today. I stopped myself out of that. And then the other difference is Soxel long. I bought that last Tuesday, was looking for a move to 14, got the move to 14, sold that on Thursday, and didn't buy it back yet. Obviously, I will, I probably will at some point. We'll see how the market goes, but so Soxel was a win that I had taken off. So that's really it for position disclosure updates. Let's jump into it. So pretty boring and slow day overall. It was a hydro farm, HYFM, which it was trying to base out here and then just made another low today. I was waiting for that to base out while the market kind of developed here. Not that it really has anything to do with the market, but basically was just watching it base out, and then it broke the base to the downside, so I stopped myself out. So market today. So pretty boring and slow day overall, but if I had to say a win for who and a loss for who, I would say a win for the Bears and a loss for the Bulls, definitely. So, I guess just read what happened. So coming into the morning, we were gapping down, I want to say like 0.5% or so, something like that. So really not a big gap down. And what we discussed this morning was usually on a small gap down like this into support, which I think we're gapping down like into the 21, but this area between the 8 and 21. Gap down into support. Our first support was 386, then it was 384, then 381 to 380, we said. Normally on a small common gap down, you'd want to be a buyer, but this is not, your normal bull market, for one. And two, there were a couple warning signs this morning as well to note. One was the VIX gapping up, the VVIX gapping up, but the biggest concern was absolutely this dollar. Big gap up last week, had a follow through gap up. Time corrected in an extremely bullish way for 2 to 3 days here, and then another really sizable gap up this morning in the dollar, which ended up closing pretty well also. So wouldn't be surprised to see even more upside follow through after the dollar today. But so, again, coming into this morning, gapping down small. Typically, you'd want to be a buyer on a common gap down like this, but this dollar was a little bit scary for sure. Definitely something to note here. So, be patient. Let's see what happens at the open. So, again, we gave SPY levels 386, 384, and then 381 to 380. So what happened? We opened, reclaimed 386 pretty quickly here. Traded up decently, and I remember like the first couple minutes, I feel like we looked okay, and it was just okay, common gap down, and I guess we should have been buying. But, as long as you're patient here, tail back down, so okay candle with a really big tail, and then you lose 386 right away here. So SPY lost 386, next level is 384. Really, really hard sell here. And the VIX kind of was just grinding higher. It wasn't really ripping higher, but pretty hard sell in this in the S&P here, down to this 384 level. And after, what was that? I guess that's 30 minutes or so. We chopped around for like another 15 or so. But basically after 10:30, that was pretty much it for the day. So 384 held pretty well. And again, the VIX was strong today, but it wasn't, ripping like any, big green day like here. this overall candle is pretty small, which makes sense. It matches the S&P candle, which is also pretty small as well. But so VIX strong today, VIX up today, but definitely not accelerating to the upside a bit here at the end into the close. But that helped 384 hold. So you just see tail below 384, tail, tail, tail. You kind of wedge out here, bear flag on the 5-minute, which we were discussing at the time. Although this 5-minute 80 MA had caught up, you're still a bit extended on the 15-minute here. So SPY looks like they poke one new low here, 67, 66. That's so funny. SPY's dirty like Baba, as opposed to Apple being clean. That does not surprise me that you're still extended on the 15-minute chart, but they poke a new low by 1 penny here in the SPY before a 15-minute bounce. But so on the 5-minute, you wedge out here, you get a new low by literally 1 penny, and then back up through 384, back up through the 5-minute 80 MA for a 15-minute correction. And then that was it really. And then we spend the entire middle of the day wedging out, doing absolutely nothing, which was very boring and very dull and on pretty low volume. And typically in general, you don't want to short a dull market. This market, for the most part, has been anything but dull lately. But there's been a couple dull days here and there that have mixed in. So in general, you don't want to short a dull market. So while SPY is wedging out, chopping sideways, VIX is failing to break higher, then breaking its uptrend, and then really making lower highs and lower lows and breaking down. So VIX breaks down a little bit. SPY goes up to actually not new highs, right? Maybe not new highs. Pretty much retest the day highs anyway, as VIX rolls over, and then VIX bounces back up into the close. Pretty in an accelerated way. This was like more of the acceleration I'm talking about here. If we saw that this morning for the first half of the day, that would have gotten us to 381, 380. But a rollover, then a complete reversal of that rollover, acceleration to highs on the VIX, that's UVXY. And we roll back over from highs to make new lows. And we make new lows by, once again, a couple more pennies, but no real follow through. And then we end up closing over 384. So overall for the market, a pretty, for the most part, boring day. Why would I say the Bears took a win today and the Bulls took a loss? So we held 386 was the first support spot, 384 is second, and basically 380 is like the real important big level here. But after Tuesday really felt like the tone changed for a few days, which we did some good buying on Tuesday. Rally, you're expecting a move to the next resistance level at 390. That's exactly what we get. We don't close over 390, but not a bad close here per se. So you'd expect that if this is going to build out well and break through 390 in the coming week or so, you really want to see this hold in the upper half here. And by the upper half, I mean 385 to 390, because the real zone's 380 to 390, right? So upper half 385 to 390. So in a better perfect world, you really want to see this hold in the upper half of this range and bump its head up against 390 for a few days, thus setting it up even better to break through that 390. So it's disappointing to see a close below 385. 384 was roughly the 80 MA on the daily chart. So it's, we did hold support there. It's nice to see it, but you would have definitely rather seen a tail off support and then a decent close, right? It's definitely not a great close here. On top of that, another warning sign that's coming out of today is from the VVIX, aka the vol of vol, which gapped up pretty decently this morning, and although it didn't close well, did hold its gap. The last time that it did that was back here. We had a very weak day, a normal gap down in the market. VVIX gapped up, traded down, but held that gap pretty well. And then that led to, that was happening when we were going sideways here. So we were going sideways, looking to break, but just really couldn't break. And while we're not breaking, VIX is going down, 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 and one thing can only go down or up in one direction for so long, right? So that day that VVIX gapped up was this day in the market, and similar but different here, where not a big gap down, but a gap down that failed, and not a bad close, not a good close, but nothing really too concerning. You're not breaking down yet. And then the next day is where we lost 407 support for the SPY, and then the next day was the CPI report. So we'll see how we gap down, or I don't want to say we're going to gap down tomorrow, but we'll see how we gap tomorrow. But definitely bulls should be a bit more cautious and on edge now, and the bears should be feeling a bit more confident, because again, we're losing the top half of this range, albeit barely. We're barely closing below 385, but we're losing the top half of this range. The dollar traded up a lot today and closed well too. We, while SPY is trying to be strong in the middle of the day, this is, rolling over a bit, grinding lower, but then ended up trading up into the afternoon when the S&P was rolling over, and this closed pretty well and is it's literally going parabolic here on the daily chart. So with the VVIX gapping up in that, basically the same scenario I was just talking about before here, right? The last time that we saw this was this day, and it was one of the only real warning signs that we had. So if this is notable today, this gap up, and then the dollar as well. We've been talking about it for a while. Pretty much everyone's talking about it because obviously it's very important. But so the dollar, big gap up today, a good close. You would definitely, by the good book of technical analysis, you would definitely expect this to have more upside follow through. So we'll see how we gap tomorrow. But yeah, definitely bears should be feeling a bit better, and bulls should be a bit more worried after today. And then the other thing is CPI number. We have a CPI number on Wednesday morning. So it's very, very likely that tomorrow not much happens. You never know, though. I mean, we broke down support this day, right? And we probably were saying the same thing in the morning, where, the CPI number is the next day, so we wouldn't be surprised if we don't see too much. But maybe they sell us off into the number again, just like they did here. So, we'll see how we gap tomorrow, and then 385 to 384 is definitely going to be the key area, where if we're above 384, we're fine. But if we're below 384, we can probably be looking to short for a move down to at least 381 to 380, with the thought process that maybe they're selling us off again to front run the number. That doesn't mean the number is going to be bad like it was last time. It just means they're front running it. So we'll see how we gap. We'll see how the dollar gaps. We'll see how VIX gaps, VVIX gaps, and we'll go from there. But that's the first big thing coming up. CPI Wednesday, earnings starts Friday morning with banks, and then really kicks off next week, and then the week following next week. So 2 weeks from this Wednesday is the Fed meeting, where do they raise by 75? Do they raise by 50? We'll see. So that's the market in general. I guess some names that we traded today. So definitely the best trades were shorting the Chinese stocks. We brought up BABA and JD. BABA was definitely a lot better than JD, but looked like kind of chaos and mayhem over in China over the weekend. Videos of, I guess, like some banks or something. I didn't read the full story, but basically like assets got frozen, so people were basically having like a run on the banks in a way. And then on top of that, Macau closing, so not like a full lockdown yet again, but casinos closing over there on the COVID on COVID fears, on COVID numbers. So these casino stocks got hit a bit today. So we were looking at China names to short. We're looking at BABA 115, which it was opening pretty much above, like right above 115. So, maybe it defends 115, maybe not. But you can see this 115 to 114 area from back over here. So BABA was the best one to go to, just, pretty much shorting. You had to be quick with it, but just shorting right through 115, right 1 through 14. And then, anything more than that is you're kind of chasing down here, even though you do get a move. But Baba short, and then that was the better one, and then JD 60, which this worked, but definitely didn't pay as well as Baba. But this JD 60 level has been a pretty big level for a long time in this name, honestly. And this, same thing, opened, made a run up to 60, but only got to 59.80s or so, came back down. So that short paid a bit, definitely not as well as Baba, and then ended up rallying. And if you did take the JD short, you probably got stopped out at some point, but never reclaimed 60. So that can still be one to go to later on. Semis, we looked at AMD 78. AMD got their price target lowered at Barclays. So 78 ticked above it and then back below this morning, and that failed very, very hard. And then that was pretty much resistance here in the S&P rally when the market rallied here. So AMD 78 was a good level. NVIDIA 155 we said, which this was another one that was very quick, just very quickly below 155. Which again, broke through, tested, held. This 150, I guess it was like 154, 155 area, but similar to Baba, just had to be quick with it. 155, 154, and then anything more, I guess you're starting to chase, even though it does end up paying you. What else did we look at? Let me look at the list real quick. So AMC, Tesla, and DWAC. So then we said AMC 15. AMC had news this morning. It was like the best summer. It was like the best weekend of the year of 2022. This did not. I guess it did trigger. Did it really? 15. No, it didn't. I think that's after hours. Yeah, it had a print after hours. So 15 was the level. And miraculously, this held 15, and this did not trigger by 1 penny. This went to $14.99 in the morning, so it did not trigger you in. Failed 15, but still closed pretty well. So this can definitely be on the radar tomorrow. AMC 15. This looks pretty good, and on top of that, a short squeeze name like this. It's not uncommon that on down days for the market, like those painful days, it's not uncommon that shorted names go up that day because just people have to take risks off the books. So even if the market does have a bad day tomorrow and some of these warning signs that we're talking about come to fruition a bit more, even if the market does have a bad day, AMC could definitely still go up. So AMC 15, although it didn't really work today, still on the radar for tomorrow, I think, just because it looks, the chart looks great. What can you say? Tesla 765. I don't think this triggered. Yeah, high 759. So we were looking at Tesla relative strength this morning to 765, but that did not trigger. And this failed very hard. This had relative strength this morning because of the Twitter news, but I guess the real Tesla players, the real Tesla holders dumped it today, probably for the same reason, because of Twitter news, and Elon's just, a bit bipolar or whatever, but this long did not trigger, and this is having a real ugly day one. Very, very damaging candle here for sure. Tesla's definitely in the penalty box now. And the only other name I had this morning was DWAC, again for the Trump news. 28 was the level we said, which we got pretty much just from like the after hours action. So 28 held in the morning. If you bought anywhere in here versus 28, you probably got your risk covered and then probably got stopped out, wedged out in front of 28 here. So 28, 28, and then grinds back up to 28 to make an ascending triangle in front of 28. Breaks 28, runs those stops, and then gets a nice little bid back up 28. So you definitely could have gotten paid. I didn't end up trading this today, but you could have gotten paid with that. And not a terrible candle, huge volume. Not a terrible candle. 30 is your next level there. So we'll see how 30 works for that. This could be on the radar tomorrow as well with the same idea for AMC 15, and just, shorted names can go up in a down market day. So you could look at DWAC, but this is garbage and just for momentum only. I'm pretty sure Trump's off the board, right? So isn't that like the main reason behind this? So yeah. And yeah, I think that's all I got. So we'll see how we gap tomorrow. Some warning signs out there today saying we definitely could make a move down to 380 and then possibly break 380. But we'll see how we gap. We'll see what the dollar looks like tomorrow, and we'll see what our VIX and VVIX look like tomorrow. CPI Wednesday morning, so wouldn't be surprising if not too much happens tomorrow into that number. But definitely a chance that they front run some selling into it just like they did before. So I'm definitely not opposed to being short SPY tomorrow below 384. I wouldn't fight it above 384, but below 384, below today's low, SPY is a short tomorrow for a move to 380. And again, above then probably not too much. We'll see how we gap. And yeah, that's all I got to talk about. So happy to take any questions, comments, concerns, complaints, what have you. GME launching NFT marketplace. I feel like they've done that already. I thought they already did that. I guess trading up a little bit, but thoughts on win long for a swing. So I'm sure, I don't know the exact metrics, but I'm sure this is a cheap and probably a decent value play at this point. The problem is there's just so much drama with the COVID stuff in China. And obviously, if we're going into a recession and demand's going to go down, that probably isn't, maybe it's not too bad for gambling, but in theory, you would probably think that people have less money to gamble with, but maybe they end up gambling more because they're depressed or whatever. So thoughts for a win swing long. So it depends if you are buying it for the chart or you're buying it for the first reason I stated, which is like you're thinking this is good value and good fundamentals here. So if you're buying it for value and fundamentals, there's nothing here really on the chart to really bite on. You got some weekly extension. You could buy this versus 50. I'll start by saying that. You got this candle, this tail off 50. So you could buy this versus 50. I would either buy it versus, because this candle's not that great today, and you're fighting negative news there. I would either buy it versus 50, or I would come up with a game plan for yourself to give yourself room to 40. If you really want, and that's more bigger swing stuff, which is what I like to do. And this market, it's been nearly impossible to do in this market, I guess, except to the short side. Win for good value and possible pop for reopening. Yeah, so shorter term, more technical, you really only have this 50 level, which obviously is a big level, and you do have a weekly pivot off it. So shorter term, you could buy it versus 50 and give yourself a couple bucks of risk for, $10, $15, $20 of reward. Bigger picture swing talk. I don't hate coming up with a game plan to give yourself room to 40 or the COVID low. And, you buy some here, you nibble more at 50, and then maybe by 47, you're in 50% of your position. And then by 42, you're probably in your full position by that point. And that would be more swinging for hold, long-term hold. If you were to do that type of game plan, that'd be more long-term hold, which, $10, $12 of risk is a lot, but is $10 of risk worth 30, 40, 50 plus dollars of reward? It could be, right? So yeah, that's probably, I would just keep it simple, and I would either start nibbling here and pretty much just buy it versus 50, or come up with a game plan for yourself to be able to buy it under, buy some more, I would buy more 48-ish, mid 48s, the close of this candle, and then probably at the low of this candle I would buy some more, and then my last buy would probably be, I don't know, low 40s, and I'd probably be very nervous by that point. But yeah, so that's what I would do. So maybe start some with fit versus 50, and you can always like break it up too. That's like, and that's part of like what Derek talks about with playing with numbers, with game planning and stuff. Like it doesn't have to be all or none, or whatever. Like you could buy some versus 50 and stop out at 50. You could give yourself a game plan to start buying now and give it, buy more down to 40. Or you could like do both, where like you buy a bunch here and then you stop out of like 80% of it if 50 breaks. But just in case, you're nervous of a shakeout, you still have some, and, you have a game plan to stop out of like the majority, but then be able to buy more, because if it's a good value and you really like it, well, if you like it at 52, you should probably like it at 48, right? So that's how I would think about it, and that's how I would go about it for win. Hope that helps and makes sense. With earnings around the corner, is there anything to do with pre-announcements? Just wondering if there's anything you would do or not do. I feel like there hasn't been a lot of pre-announcements. If anything, probably not, Bill, because I feel like the theme of this earnings season is going to be what we saw with MU, where honestly, like the numbers probably aren't going to matter that much, because they're probably going to be bad everywhere. So it's going to be the next day, or like that night and the next day, and how they react. I think that's going to be key. And we've seen in times past too, where like the theme in the first half of earnings season will play out one way, and then by the end of earnings season, the second half, the third quarter, that gets overplayed and that starts to change. But so we'll see if we see similarities to MU in the bigger names, where they come out with bad numbers, which is probably already expected and at least partially priced in. And then we'll see how the market reacts to them. And if we start to see like a real pattern of what happened with MU, that's definitely going to be some good juice for the market to head higher. But yeah, I think that's going to be like the main theme and the main strategy, I guess you could say, for this earnings season. I have trouble trading right at the market open. Can you explain your thought process a couple minutes before the open, and what to look for to determine which way a stock should move at 9:30, and how can you tell a reversal may be happening a few minutes in? It's all... Well, so pretty much all of your trading should almost always be based on daily levels for the most part, unless it's like real extreme intraday extension. But it's really just levels and volume, and just like a good combination of both of those. So, and usually I would say 99%, I don't want to say 100%, but the majority of like opening drive trades, you're going to be taking liquidity in those trades. So you're going to be buying through levels or shorting through levels and using buy stops or sell stops, or crossing the market or something. You shouldn't be limiting in and trying to add liquidity in those types of trades, because by the nature of that trade, it should be more of like a momentum trade. So if it's a good trade, your limit buy shouldn't even get filled. So yeah, it's really all just levels and volume. And usually, because it's right off the open, and if the trade's going to work or not work, the volume is bigger. So usually the risk is more, or maybe not more, but at least the space risk is more. So if you take 400 shares for 25 cents risk, a real opening drive trade, you're going to have to probably get more used to like 50 cents risk. So you either risk more, or you take less size to risk the same amount. But so I don't know, like Baba this morning, whatever your level you're using, 114, 114. Oops, I just clicked on the wrong thing. Like Baba, just Baba this morning, whatever level you're using, 115, 114, BABA opens pretty much immediately because it's so close, especially pretty much immediately after the open, you put a sell stop in at 115. I wouldn't use. It depends on the stock how you do this, and this is getting a little bit. I don't want to like overcomplicate things, but it depends if you want to use 114.99 or 115. I like to use 115 or even like 115.05 or 02 because I like to take the liquidity that's probably going to be at 115 and get 115 pricing as opposed to 114.99 and then you get a bunch of slippage. So yeah, I would probably do like 115 for the sell stop or 115.01. But in a way that's cheating, right? So like there is a chance that I get triggered and 115 just gets absorbed and then it runs me out and stops me out. So that's cheating a bit in a way. But the point is, you have your level. This is a short play, so it would be a sell stop. BABA opens, you put a sell stop in at 115. It triggers. You have to do some quick math in your head, and you see what the high is, and you calculate your risk. This high was 115.58, so roughly 50 cents a risk. You can round a bit. So you're taking 50 cents a risk, and obviously you get paid on that like right away. And that's pretty much it, honestly. It's pretty simple. Trading on the open it's simple, but advanced because it's so fast. And one, usually there's more risk, at least more space risk. And two, it's just it's fast. Like there are times where you have a trade like this and the daily level holds, like it flushes but holds. And when I say holds, I mean it flushes but snaps right back over it. And you got to be quick with getting your stop in there. Like it happens all the time, yeah, because it's a daily level, but markets aren't perfect. Markets, aren't going to hold daily levels to the penny every single time. In fact, usually they don't hold them perfectly, but that's when you get the tail below but a close above and you say, okay, it closed above, so it's okay. So yeah, trading on the open is fairly simple, but it's just really fast. Because if you're getting triggered at 115 here and then you're seeing, okay, like what's the high? 115.58. So, and that's why I like to round too. Like if I'm saying 58, I'm just doing 50 cents in my head because it's quicker than doing, okay, like 58 cents and what's 58 times 2? 116, as opposed to just, you can round a little bit just to do the quicker math. But there's a chance that this breaks 115, goes to 114.80, and literally within 30 seconds or less, it's snapping back over 115 and taking out day highs. And if you're not quick enough, that 50 cents of risk is turning into $1 or more of a loss. So yeah, it's your daily levels. It's good volume. Usually you can tell the volume by like literally a minute or two in. Literally a minute or two, you can usually tell if the volume's good or not. And yeah, just respect the level and it triggers, you get your, evaluate your risk, and that's it really. But yeah, so it's simple, but it's hard because it's fast and it can be like a little bit intimidating how fast the tape's moving right at the open. But hope that helps, Justin. Hope that makes sense. Pat, can you do a Hotkeys video class? I feel I'm so inefficient not using them as they're designed. Yeah, I have always meant to make one and just obviously haven't gotten it done. Aaron, why don't you email me with what your Hotkeys setup is, and I could try to give you some suggestions for how to change it. Personally, for me, the way mine are set up is I use my function keys F1 through F12, and I always ask people this, like how they're grouped out, or if they're not. Some people it's just like a straight line. For me, they're grouped out in groups of 4. So I have like F1, 2, 3, 4 in a group, and then a little space, and then F5 through 8, and then a little space, and F9 through F12. So I space them out because I don't want to have like market buy and market sell right next to each other, or like market sell and limit buy right next to each other, because if you hit the wrong button and I'm trying to put a limit buy in and I'm slamming the bid to get short, that's obviously bad. So I have mine spaced out at the ends of each group of 4. And all I have is just F1 market buy, F4 market sell. That's the first group. They're not right next to each other, so I can't hit the wrong button. Then a little space. F5 limit buy, F8 limit sell, space, F9 buy stop, F12 buy stop. So that's all I have. Just market buy, market sell, limit buy, limit sell, buy stop, sell stop. And they're spaced out in a way where I'm comfortable and I know I'm not going to hit the wrong key and stuff like that. But yeah, definitely feel free to email me what you have for your setup, and maybe I can suggest something a little more efficient. Would I be interested in a long-term Twitter swing? No, but let me finish your question. The Elon saga will definitely give us nice entry opportunities and all good prices. Saying that, okay, so I guess I should have read your question. Here, no, I am not interested in Twitter here, long here. It's hard to say, like, what's too cheap for Twitter, because, I mean, this is the history of Twitter, and it's done nothing. Like, if Twitter has given you no return in its history of being public. So that's disappointing, right? So it's hard to say like where the value zone is for Twitter. Usually the COVID lows are a good kind of reference point for like where these lows were. So this was the 20 level from back here. So 20 is a gigantic level. So would I be interested in Twitter here now? No. High 20s, yeah. I think you could start to nibble in the high 20s, and then 25 is like a pretty big level too. So in the high 20s to 25, yes. And then maybe you could use 25 as an out. Otherwise, give it more room to 20. It's hard. I mean, I use Twitter every day, but I feel like a lot, that's because I'm in finance and I'm using it for news and stuff. I have some friends that use it, but the majority of people definitely use like Instagram and stuff. So it's hard to get like a good gauge on where it could go and the popularity of it, but I feel like it's just such a global thing. Like I don't think Twitter's gonna fail. It's hard to see it fail, but they just can't make good money for themselves. So you gotta ask yourself like what the value zone is, and yeah, probably this in the 20s area. So maybe starting like 28-ish, 28.50, and then it would be one of those things where you gotta start early and hope that you're early so you can buy more cheaper, because there's no reason for this to have like a big move up. It's a total drama disaster. But yes, I think there's some value there. So it's not easy, and not here. But what you said, yeah, say in the high 20s, I think you can start to nibble. Looks like I got through the questions. Any other questions, or shall we wrap it up for the day? And I believe Derek will be back tomorrow after being the jury, the judge, and the executioner. Cool. All right. Yeah, I guess we'll wrap it up. So yeah, we'll see how we gap tomorrow. There are warning signs out there. Today is very similar to this day back here, where it was a gap down. We sold off. We didn't close well. We weren't really in trouble yet, but we didn't close well. VVIX gapped up this morning. This morning today, and is holding this gap up. So SPY looks similar. VVIX looks similar here after also arguably getting exhausted to the downside again. So that's a big warning sign. And then obviously the dollar gapping up huge this morning, closing well, looks like it should keep going higher as well. So two pretty major warning signs out there for us. CPI Wednesday morning. They might front run and sell us off a bit tomorrow. I think you can be short SPY tomorrow under today's low, under 384. I would not fight that short back above 384. So more of a momentum short. But yeah, we'll see how we gap, and we'll assess tomorrow morning. So thanks, everybody. Have a good evening.